It was a wild day out there, as it looks like we are finally seeing some panic set into the market. So are things going to get worse before they get better? Is this a dip you buy? What do you do, Guy?
Well, I think the good news is we're right on the cusp of earnings season. We sort of talked about that last night. I'm not going to suggest that I knew the Dow was going to be down 800 points today, but we have mentioned the warning signs have been there. The market just hasn't cared until today. What are those warning signs? Well, technology absolutely has been rolling over. Quite frankly, it started with Facebook a couple months ago when it went down 23% in 7 minutes. We talked about how an individual stock can do that. Who's to say the broader market can't do that? The small cap index has been going lower. Transports have been starting to roll over. I'm of the belief that this whole thing with China is not going to get settled anytime soon. I think that's been a problem. Mr. Mnuchin today said, China, don't continue to devalue currency. I think that was a factor. Finally, though, the market seemed to care. That's the bad news. The good news, as I said, we're on the cusp of an earnings season that I think will be strong. My concern will be, what will guidance be in the wake of a lot of these pre-announcements we've seen over the last couple of weeks?
And maybe you get buybacks back. That was the reason earnings were coming up. You had a blackout.
A buyback blackout.
You had a blackout. So maybe you get them to help the heavy lifting. But I think today was technicals. It wasn't fundamentals. If you look back in January, February, similar, but we ran up a lot more prior to January. So I think all things being equal, we're right around support levels in the market, the 200-day.
Earnings season. I mean, Guy had mentioned the PPG,
right.
Procter & Gamble.
That's the problem we have, right? So if we hadn't had those earnings warnings and Flower Corp after the close today, earnings warnings there. So if you didn't have those, then you might look at this and say, okay, maybe this is an opportunity to buy the dip for the longer run. I'm not clear on that now. I do think in the very short term, you see a day like this, Dow's down 800 points. This is not the day to panic. This is the day to start looking at, hey, wait a second, as a trader, maybe I want to pick this up. So what I'm looking for, and maybe it happens tomorrow, you wake up, Dow is down 200-300 points of futures in the morning, and then you get that reversal. That to me would be very positive, and I would be buying that.
I agree completely. We're a little bit further down now. Clearly, markets overseas are going to open down. Europe's going to do poorly tomorrow. And we'll probably open down, too. I'm sort of intrigued by this. I always say that when things start to trade down in integers at a time, something else is going on, and that's appealing to me. I mean, you know, today I got trampled by that thundering herd of integers going down. But I don't think that things have changed that much fundamentally in terms of how the U.S. economy is doing. And I think we're going to see good earnings. I hear Guy's point, and it's a good one about it's not just the earnings, it's about the guidance. But now the bar is lower for earnings, right? It's significantly lower in many cases for earnings.
But doesn't it mean, remember we talked about in January, February, we heard about risk parity accounts that no one understands, the CTAs that no one understands, gamma that no one understands. It felt like that integers was part of that. So I don't think it's something that's tangible, which makes it more viable to me.
So
it runs its course.
Okay.
You de-leverage, you de-risk. So once you get to a certain level, it becomes a screaming buyback, and then it evens out a little bit.
And the 43% spike in vol that we saw today, I mean, if you were to believe that there are risk parity accounts at work, et cetera, and all that's going on, then that was one of your catalysts.
Right. And so all those things are reason why you want to start looking to buy this market potentially rather than panicking here and trying to buy puts with vol spiking like that. This is, to Grasso's point, kind of a technical, mechanical part of the market. That doesn't mean we can't go lower. It doesn't mean that the economy might be slowing or not. But the very short term, there's going to be a tradable opportunity here.
Here's my question. I'm sure the home gamer is thinking the same question because we have very astute viewers out there. You're thinking, what does this market sell off tell us? Are there questions about the U.S. economy, to Karen's point? I mean, when you take a look under the hood of the markets, right, we lost FANG, back in June. The average small cap stock was down 6% or more than that in the month of October, down 20% from their 52-week highs. We have all sorts of growth the growth stock areas really falling off. So didn't that tell us early on that there are questions about growth, and then we get all these warnings? Should I be worried?
There are questions about growth without question. However, I mean, you're talking about a U.S. economy that has historically low unemployment rates. Optimism is through the roof. Profit margins until recently have been spiking. So all those things.
With man-made headwinds. Man-made headwinds in the form of tariffs, in the form of higher oil prices,
which
because of the
we're
sanctions
doing.
on Iran.
A lot of it is self-inflicted. Now, President Trump might be right. The Chinese might be absolutely ripping us off intellectual property-wise and in terms of trade. There's no question about that. I have no idea. I don't sit on those meetings. But to think there's not going to be a ramification for the broader market on the back of that is foolish.
But we've had those worries, though. We've had those worries
now, and the market hasn't cared.
Right, and all the fundamentals that you just started naming have been positive. They've been tailwinds to the overall economy. That's why it just seems to me that it's a more deleveraging, risk-off type trade based on things that have been around there for quite some time.
I'm going to cast myself in the role of Debbie Downer tonight, though.
Oh, really?
Because we have not seen the impact of the latest round of tariffs, and we're only getting whiffs of that now with these warnings. And so every single indicator that you point to.
But when you look at Powell, what did Powell say? He said we've analyzed the data points and we haven't seen it take hold in the data points as of yet. He's got to talk himself
into. You tell that to PPG.
into.
You tell that to Procter & Gamble. You tell that to Pepsi.
There's a reason why it's in these certain aspects, and that could be transitory.
Well, the question, transitory is the right point here, right? Everybody in the market, or at least the narrative of the market, has been, listen, these tariffs are going to be temporary. We're going to win this trade war. It's going to be better coming out the other side. Yesterday, the IMF comes out and says, hey, wait a second, maybe not. Now we're starting to get earnings warnings. Companies are saying things might be slowing down. These tariffs might be hurting. If you think that the tariffs are going to go away relatively soon, let's call it the next quarter, then yes, this is a longer-term buying opportunity. But I'm not that clear on that. It doesn't seem to me that these are going to go away that quick. So I think you have to be more of a trader, much more nimble in this market.
It also I'm sorry, just one more thing. When I'm trading on the floor today, what I didn't like was that everyone said, let's just get the sell-off over with, as if it's a reset, where you have a sell-off and everyone's back in place and you're guaranteed another bull market. That, to me, speaks to the complacency that we've seen in this marketplace.
You know, I hear a lot of talk about the Fed is derailing this, but everything you mentioned, I mean, there is inflation. President Trump said we have inflation in control. I'm not certain that's the case. I mean, and everything we've seen, Pepsi, Floor Corp you just talked about, Procter & Gamble, PPG. I mean, they're seeing inflation somewhere. It's clearly costs are going higher. The Fed is doing everything right. I'll say this, though, and I don't know if people would agree. If the Fed flinches in December because of what potentially could be a market sell-off, we have bigger problems. Doesn't go.
So
even in light of this sell-off, you still want the Fed to stay
Market's
full
down. The
steam
S&P is
ahead?
down 5% from an
For
all-time high.
their credibility, they need to. For the Fed's credibility, they need to stay
and
on the
then what's
path.
the market response to a Fed rate hike at this point in the month of
where
December?
we are,
Is
right?
it
If we
higher?
bounce back and we're at the highs again and the Fed raises rates, then I think you've got a problem. If we're at the lows and we've priced in this December hike, then you know what?
When did the sell-off start? It started with Powell's comments. October 2nd, we had the comments. October 3rd, we start to fall off a cliff. This is all generated by Powell, which was a risk-off event. If he backs off, everyone thought he was hawkish. So to your question, if he backs off and is dovish, it has to be the inverse of what we've seen already.
No, why?
The market has to be bought.
You couldn't look at it as, all right, the Fed really, they didn't want to leave this path, but they have to. Things are so bad. I think they'll stay on the path.
I think what he was saying is we can overshoot a little bit based on inflation that no one can explain why we haven't seen it. We see pockets of it.
If you see inflation, though, here's a question, though. If you see inflation and you say, oh, inflation in the economy is a good thing for the right reasons, economic growth. What if you see inflation in the economy and it's man-made inflation?
Right.
It's self-inflicted inflation brought on by tariffs, brought on by higher oil prices because of sanctions on Iran. Is that the same kind of inflation that you still hike rates and
on top of that question, they have to then think about the market implications. They have themselves a job that's already impossible, then is extraordinarily impossible. They can't try to navigate a market in this environment. They can't stick the market landing and try to raise rates and try to think about everything that you just said. It's impossible.
I think they got to raise rates.
I agree.
And I think just step back, historically look at rates. Look at this quarter point that we're talking about. I mean, really, I said it's a much bigger.
I agree, but the path from 3% to 3.25% on the 10-year has been fraught with volatility.
But what you have to look at for the Fed is, remember, we're talking about inflation. Their main indicator is inflation expectations, and that hasn't ticked up at all. So if I'm the Fed and I'm looking at this and I say, you know what, if I don't raise, I lose credibility because the market fell down. All the indicators I see as a Fed, no inflation expectations. Why would I get off the path of raising hikes at this point? So I think they do go. I think that is going to be a headwind for the market. But in the short term, you might get this tradable bounce here.